Hey everyone, Longacres Finance here, and today we will be taking a look at a dividend stock that just announced a 10% dividend increase. A company that is a leader in their industry, and one that I see with potential to keep growing in the future. That company is none other than MarketAxess Holdings, ticker symbol MKTX. Let's start with a little history, then take a look at the current performance and financial data, and wrap up making some assumptions where the stock can go in the future. Ready? Let's go. MarketAxess Holdings started from an idea by Richard McVey, the current CEO of the company, back in 1999. He started the business in the year 2000 with $24 million of capital raised from early investors. Today they are a market leader in open trading of fixed income instruments. A significant number of bonds are traded on its platform, and the company has been expanding its international footprint, having already established themselves in the US and European markets. Through successful partnerships with BlackRock and other big players in the investment world, MarketAxess Holdings has experienced significant growth since their initial public offering in 2004. They were picked as the second best stock of the 2010s with a total return over 3,000% during that decade. Fast forwarding to the present day, the stock currently trades for about $534 per share with a trailing PE ratio around 70. This is a pretty high PE ratio when compared to the broad market or the financial sector. It is also about double the trailing PE ratio of the stock itself. However, the entire market is running hot now, and most stocks are trading for elevated price to earnings. The stock has cooled off recently with a negative 7% price return over the past 3 months. It has been close to flat over the past 6 months and is trailing the S&P by about 14% over the past 9 months. The past 1 year return is very solid, sitting south of 42%. But does that recent cool-off offer a good entry point to jump on board? Stay tuned for my valuation and future outlook right after we dive deeper into the dividend history and financial performance. But first, make sure to click the like button, and if you're new to the channel, make sure to subscribe so you don't miss any future videos. MarketAxess paid their first dividend in November of 2009, a cool 7 cents per share. They continued this dividend on a quarterly basis at the same rate in 2010. In 2011, the dividend was raised to 9 cents a share, a 28.5% increase. In 2012, the dividend increased to 11 cents, and they also had a special dividend of $1.30 per share in December of that year. In 2013, it went up to 13 cents. In 2014, it went up to 16 cents. In 2015, it went to 20 cents. In 2016, it went to 26 cents. In 2017, it went to 33 cents. In 2018, they bumped it up to 42 cents. 2019, they raised it to 51 cents. Last year, they were paying 60 cents a share. And this year, MarketAxess just announced a 10% dividend hike, and the new quarterly dividend will be 66 cents per share. This gives MarketAxess a lifetime average growth just north of 20%. A very nice dividend growth streak. And although the growth has been slowing down recently, it still remains in the double digits. Taking a look at their earnings per share history, we can see a similar growth trend of 20%. If they can keep growing their earnings per share at this pace, investors can expect the dividend increases to continue in the future. The forecasted earnings per share for the next 3 years are expected to grow at about 12 to 13%. Which implies a slower growth than that which the company has achieved thus far. Additionally, MarketAxess has maintained a payout ratio around 30%. This leaves a lot of cushion to maintain their dividend, even during a bad year, and room to keep growing their dividend, even during a below average year. If MarketAxess achieves the forecasted earnings per share growth and maintains their current payout ratio, we can expect the quarterly dividend to increase to about 74 cents in 2022 and 85 cents in 2023. Looking at the last 10-year revenue for MarketAxess, we can see consistent growth year on year with some acceleration in the past few years. Revenue increased by about $80 million from 2018 to 2019, and about $130 million from 2019 to 2020. A side note here, I'm using the trailing 12-month revenue, which may or may not be updated with Q4 results the company just announced. Either way, the company has a very impressive top-line growth. Let's see if the case is the same for bottom-line growth. And yes, it is. We can see consistent year-on-year growth of net income. This is very good. It means that MarketAxess is growing their top line, and that income isn't driven entirely by capital expenditures, since it carries forward to their bottom line. Taking a quick look at the outstanding shares, we can see that they aren't actively buying back their shares or issuing a lot of new shares into the market. And if they are, the two are offsetting each other. And I just want to take a look at one more financial statement metric, the free cash flow. Let's jump over to the cash flow statement. We can see that free cash flow has been growing quite nicely, with the exception of the trailing 12 months. Let's see what's going on here. We can see that the change in accounts receivable is significantly higher than usual. This could be a timing issue because the investing industry hasn't really taken a hit from the pandemic last year, so we wouldn't expect clients to not pay their fees to MarketAxess. I bet some clients are struggling, so this will be something to pay attention to going forward. MarketAxess still has $115 million of cash on hand, so they do have a sizable cushion to ride out some accounts receivable disruptions. Moving on, MarketAxess announced impressive earnings on Wednesday, January 27th. They reported revenues grew by 32%, and operating income grew by 51% as compared to quarter 4 of the prior year. Operating margin increased by 6.5%, with earnings per share growing by 45%. Their all-in-all trading platform, Open Trading, saw credit volume increases of 63%. MarketAxess saw their market share grow for both U.S. high-grade and U.S. high-yield bonds. The U.S. high-grade market share increased to 22.8% from 19.9%, and the U.S. high-yield market share increased to 17.1% from 10.6%. Full year 2020 financial highlights show that total revenue grew by 35% during the year. Operating income increased by 49%, with operating margin going up about 5%. All very good numbers, and the market must agree, since the stock was up today, even though the broad market was selling off. We can see that MarketAxess eased up on share repurchases in quarter 4, buying back only 1,400 shares at a cost of about $700,000. The board announced up to $100 million in buybacks available for 2021. Whether they exercise the full amount will depend heavily on the price movement during the year. The company is forecasting a 13% increase to overall expenses next year. That is in line with historical increases to expenses. They also expect their effective tax rate to increase from the current 20% to a range between 22 and 24% next year. And since we are looking at forecasts, we can segue into valuation and future assumptions for the stock. Using the new quarterly dividend rate of 66 cents per share, MarketAxess has a current dividend yield of 0.50%. While that isn't appealing to a dividend investor, MarketAxess is more of a dividend growth play than a pure yield play. Comparing that to their historical dividend yield of 0.68%, we get a fair price of $390 for the stock. MarketAxess is currently trading at a PE ratio of 70.12, and their long-term PE ratio is 40.69. Based on these ratios, we get a fair price for MarketAxess of $310. So based on dividend yield and PE ratio, we can see MarketAxess is trading at a premium compared to their historical price. Analysts give MarketAxess a score of 2.7, which is a smidge above hold. If you're unfamiliar with analyst ratings, a 1 is a strong buy, 2 is a buy, 3 is a hold, 4 is sell, and 5 is strong sell. And the reason MarketAxess has a rating of 2.7 is because this is averaged from multiple analyst ratings. The average analyst 1-year target price for the stock is $579, which imputes a gain of about 9% from today's price. Coupled with their yield, you're still looking at a sub 10% total return. Averaging my two valuations shows that MarketAxess is about 34% overvalued currently. Of course, valuations are only assumptions, and the current market is running hot. Therefore, I think the stock has the potential to hit the analyst target price or climb even higher. The company will continue to grow in the future, and that growth will be reflected in the share price. However, there is some downside risk if the overall market cools off, and we see a correction. If MarketAxess can maintain their current PE ratio and hit their forecasted earnings per share, these are the following prices we can expect the stock to move to. However, if their PE ratio drops back to their long-term average, these are the forecasted prices we can expect. I currently own MarketAxess in my portfolio, with a target allocation of 1.06%. This equates to about 1.5 shares, and my actual holding is 1.32 shares. So I may add to my position in the near future. They are a long-term holding for me, and I will be adding to the position, dollar cost averaging my way in. Let me know what you think of MarketAxess Holdings in the comments below. That's it for today. Thanks for watching. See you next time.